What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. The midterms are coming up, and I am in rare form right now. But I got 3 real estate investment trusts to buy for you guys. These guys have recent dividend hike announcements. I'll go over that. I'll do a review with these stocks. What you guys actually want me to do a review on them. They're in-demand companies, and one of them I own. Well, actually, 2 of them I own. But this one, it's a big one. The dividend hike was huge, and I'll go over that with you guys. So if you're new to this channel, again, make sure you subscribe and hit that notification bell so you don't miss future videos. Smash that like button, and let's check these stocks out right now. I literally posted a video on these guys, Arbor Realty Trust, and there's some information about them that just came out that's very exciting. Their dividend yield is 8.29%. PE ratio is 8.10. The volume is 1.66 million US dollars. Market cap is 2.48 billion US dollars. Key range was 1482 to 2074. And its day range was $17 to 1747. Its previous close was 1673. So first of all, you're looking at a mortgage-backed real estate investment trust, and I did do a review on these guys. Their revenue increases every year. They're sitting at $17.36. They have beaten the S&P in the past 5 years. For a mortgage-backed real estate investment trust to beat the S&P in the past 5 years, that's very impressive. And I'm going to go over their dividend history real quick. So studying the trends of Arbor Realty Trust, you have 13 cents, 15, 16, 2013, 13 cents, then 2017 it hit 16, then 18, then 19, then 21, then 25. You got a little special dividend of like 15 cents, 27, 28, 29, 30, 31, 32, 36 cents. And it's sitting at 1737 with a PE ratio of 7.06. Remember, FFO is the most important. The dividend yield is 8.45%. But what really excites me about this, and why am I revealing to you the stock again? But even more exciting, and this is today, Arbor Realty Trust reports the fourth quarter and full year 2021 results and increases dividend for 7th consecutive quarter to 37 cents per share. So you got 36 cents to 37. They're giving yourself a raise, and that's what's very attractive. The earnings report was very attractive. And again, this is not financial advice for entertainment purposes, only disclaimer in the description, but you're getting dividend hikes. And this is why Arbor Realty Trust is a mortgage-backed real estate investment trust. My honest opinion is the best one out there. It runs circles around agnc stock. Don't get me started on agnc, because Arbor increases its dividend, its revenue is strong, and agnc is just stagnant. Agnc is a yield trap. Just look at the trends. I may have to do another video on that if you guys request that. Let's jump to the next dividend stock. That next stock is Extra Space Storage. EXR is a symbol. It's sitting at 188.66. Dividend yield of 3.18%. PE ratio of 35.07. Volume is 727.98K. Market cap is 25.27 billion US dollars. That's a nice high yield, 3.18%. Its year range is 116.49 to 228.84. Day range is 188.55 to 190.45. So there is a dip there, and these guys have beaten the S&P in the past 5 years. That makes them a very attractive traditional and/or Roth IRA, as well as Arbor Realty Trust, because it's beating the S&P, increasing its dividend. And again, you want your net asset value to increase. You have a traditional and Roth IRA. For people like me, that like dividend investing, I just like a stock to be at the same price and just increasing its dividend over time. That's what makes them very attractive. And you don't want them to jump too fast against the S&P. But these guys, they're a beautiful dividend stock, traditional IRA, and Roth IRA material. I mean, look at their price per share increasing. There's a dip, and I'll go over these guys. I swear these weather changes in Ohio are driving me nuts when I'm trying to do this video. So Extra Space Storage is the second largest operator of self-storage facilities in the US since we were founded in 1977. We have taken the storage by storm. In the last 5 years, they added $4.6 billion in new acquisitions to their national portfolio. So how much money are they making? Again, this is in millions of US dollars. 647, 782, 991, 1,105, 1,096, 1,308, 1,356. That's millions in US dollars. So think of how much money they're generating if you convert that. So I like that. Let's go over their dividend trends. Look at this. 2013, 40 cents. 2014, 47 cents. 2015, 59 cents. 2016, 78 cents. 2018, 86 cents. 2019, 90 cents. 2021, $1, and now they hit 150. It's very attractive. 125 to 150. That's pretty hot. Now they put 2.62 on here, but again, they're increasing their dividend. They're a high demand stock. They're generating revenue like crazy. Companies need these guys. So here's the exciting news about these guys that I wanted to reveal to you guys. So this is what's exciting, which I revealed to you. So they rose 0.4% pre-market. They raised their dividend by 20% to boost its implied yield above the peer group. Quarterly dividend was $1.50 a share, up from $1.25 a share. I swear this weather is just killing me, man, with my sinuses. And so you're getting dividend hikes. And again, this is a excellent traditional and Roth IRA stock and an excellent dividend stock because you're getting beautiful dividend hikes and you're getting a nice raise. Jump to the final dividend stock. And here's one that I own and I just bought today on M1 Finance. Medical Properties Trust, MPW, is sitting at $20.60. A nice high dividend yield of 5.44%, a PE ratio of 18.59, volume 4.77 million US dollars, market cap is 12.21 billion US dollars. The year range was 1939 to 2413. Day range was 2044 to 2094, and its previous close was 2047. What makes these guys very attractive, and why did I buy them? So these guys are obviously a medical real estate investment trust. They have a global portfolio with the United States, Spain, Australia, Germany, Switzerland, the United Kingdom. So the most important thing is the diversity of this real estate investment trust. So this is what makes these guys very attractive, and this is what grabbed my attention to get me to buy them. And again, this is not financial advice for entertainment purposes, only disclaimer in the description, but I like these guys, and I'll go over their portfolio. They have a total of 438 facilities, 9 countries, 46,000 licensed beds, general acute care hospitals, behavioral health. I just discussed that in my previous video, so make sure you check that out with the rise of behavioral health, inpatient rehabilitation hospitals, long-term acute care hospitals, freestanding ER urgent care facilities, and other. So people need acute care. That's important. Behavioral health is in demand. Inpatient rehabilitation is important because there's a rise in strokes, there's a rise in amputations because of diabetes, there's a rise in heart attacks. Sedentary lifestyle is taking over, and it's unfortunate. Long-term acute care hospitals, so LTAC facilities, people are getting sicker. And, in a hospital, LTACs, people need LTACs because they're going to take a longer time to recover. Say like you get bad pneumonia or people that had COVID and are trying to recover. There's a lot of people that have been sent to LTAC. The freestanding ER urgent care facilities, they're always going to be in demand. People go to the urgent care for sometimes the dumbest things, and ER as well. And it's crazy. I mean, some people just don't even want to put up with going to their primary care doctor. They just want to go to ER urgent care. So there's some things it's like, why are they here? They could have done this. But acute care hospitals are in demand. All these are in demand. So, there's a correlation with people getting sicker in the sedentary lifestyle. And I'll go over their revenue and their dividend history. And this is what I like about these guys. Okay, they're cheap. Look at their revenue in millions of US dollars. 312, 441, 541, 704, 784, 854, 1,249. So you're seeing jumps, high jumps with this real estate investment trust that is well diversified and in a lot of countries, and they're very well diversified. There is a demand for that. So I'm trying to be as basic as possible with people getting sicker and everything. And the rise of diabetes is terrible. Diabetes, hypertension, and heart attacks, heart failure. It's an epidemic. It's shame, self-care is just thrown out the window. Tell people take care of yourself, they're not going to do it. And it's sad. And I'm going to show you their dividend history. All right, so look at these trends of MPW. So 2013, 20 cents, 21 cents, 22, 23, 24, 25, 26, 27, 28 cents. So they're sitting at 5.42%, PE ratio of 18.62. And again, 2021, 28 cents, 2013, 20 cents. So they're slowly increasing their dividend, and there's a little bit more information about them. Again, they're sitting at 2061 right now. And this is even better. MPW announced the board of directors declared a quarterly cash dividend of 29 cents per share to be paid on April 14th, 2022 to stockholders with a record on March 17th. This increase reflects a 4% increase over the previous quarterly dividend and marks the 8th consecutive year of an increase in cash dividends. That's what I like about these three dividend stocks. I own MPW, Arbor Realty Trust just increased their dividend, and EXR is another attractive dividend stock. So if you're new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I'm going to try to squeeze in one Saturday or Sunday, so keep an eye on my channel and make sure you hit that notification bell so you don't miss future videos. You guys take care and have a great weekend.